Drum guys, welcome back. Right now we are in 2026 and that is 17 years since Bitcoin was created. Just last year October we saw Bitcoin hitting a new all-time high of $126,000 but currently hovering around $70,000 to $71,000. We have seen this movie before: massive pump, brutal correction, people calling the top, and then Bitcoin does its Bitcoin thing. But here is the thing: while Iran and US war is still on, analysts predict the price of Bitcoin to still drop way below $60,000. And now the big question is, will Bitcoin ever hit a new all-time high? In this video, we will break down the historical pattern, what is driving the current dip, and my personal take on when or if we could realistically see new highs. So without spending much time, let's dive in. In 2011, Bitcoin witnessed its first crash after attaining an all-time high of about $32 and then fell down to $2. That was about 94% drop. However, in 2013, after 30 months interval, it surged aggressively to above $1,000. That was a massive comeback. In 2015, precisely in January 14, the price dropped heavily to $200, reason tied to Mt. Gox collapse, which lost about 744,000 BTC. Moving forward to 2017, the price rallied to a fresh all-time high of about $19,000, and in the space of 1 year, it fell down to $32,000. In 2020, during the COVID-19 pandemic, the price also witnessed a 60% drawdown after climbing to $10,000. This was the shortest crash as the price peaked above $29,000 by late 2020. The following year, 2021, the price accelerated aggressively to $68,000 and then fell to nearly $15,000 in 2022. That was about 79% drop. The dip was led by some factors like the rising interest rates, China mining ban, Terra Luna collapse, and FTX bankruptcy. And so far in 2026, the market has dropped to $63,000. That is about 50% drop so far from the all-time high. Analysts ties the current dip to post all-time high profit taking, macroeconomic factor like the current Iran-US war, and normal cycle correction. So now let's look at the factors driving the current 2026 Bitcoin dip. The current Bitcoin dip is driven by a mix of macroeconomic pressures, geopolitical shocks, cycle dynamics, and market mechanics. This isn't a single event crash like the FTX or Terra. It's a compounding risk-off environment that hit risk assets broadly, including BTC, which continue to behave more like a high beta tech growth asset than pure digital gold in turbulent time. So here are 6 factors that contribute to the current 2026 Bitcoin crash. 1. Escalating US-Iran geopolitical tension and Iran warfare. The primary trigger for the sharpest leg down has been renewed Middle East conflict, including US strike on Iran and broader war risks. This has sparked a concern as investors move their assets to traditional safe havens like the USD, treasuries, and gold, by triggering risk-off selling across equities, crypto, and other volatile assets. 2. Trump new tariff announcement. President Trump announced high tariff up to 15% on goods coming to the US from many countries. This worries everyone because it could make things more expensive, slow down the economy, and cause a trade problem. When people think the economy might worse, they sell risky investments like Bitcoin to play it safe. Number 3 factor is people selling after big win, that is profit taking. Bitcoin went way up in 2025. Many people who bought early, long-term holders decided, okay, I made a lot of money, it's time to sell some and take my profit. When a lot of people sell at once, the price drops because there is more Bitcoin for sale than people want to buy. The fourth factor causing the current 2026 dip is forced selling from borrowed money. Some traders borrow money to buy a lot of Bitcoin. This is called leverage. When the price starts falling, their loan gets risky, so the exchange automatically sells the Bitcoin to pay back the loan. This in turn creates extra selling pressure and makes the price fall even faster, like a snowball rolling downhill. The fifth factor here is normal cycle slowdown after the big peak. Bitcoin has a pattern every few years. It goes crazy high after a halving event, then has a big drop, often called the bear market or correction. Currently, we are in the drop phase. The market is just cooling off after getting too excited last year. This happens almost every cycle and price usually come back stronger later. The sixth factor here is everything feel connected to normal market. Bitcoin acts a lot like tech stock these days because big companies and funds own it. When stock fall because of the same warfare or tariff news, Bitcoin fall too. It's not acting like safe gold right now. Rather, it's acting like a risky bet. And here's my take on this before I round up this video. The past BTC crashes we analyzed show that Bitcoin has the tendency to always hit a new time high after each crash. Historically, the current Bitcoin dip is expected to come back with a heavy pump, reaching a fresh all-time high, though it might take 2 to 3 years. That is speculating between 2028 to 2029. And if you observe closely from the previous crash, you will notice that the percentage drop has been on average of 80%. A simple calculation of 80% drop from the new all-time high gives about $25,000, a kind of clue of where the price is expected to drop to. But considering the fact that Bitcoin now has a strong ETF support and high institutional adoption, the percentage drop is likely to be around 70% or thereabout. So by calculation, we see that the price is projected to fall around $54,000. This is my analysis from past cycle. Please don't take this as a financial advice. Always do your research before buying any crypto. If you want to know when Bitcoin will start pumping, the signs that follow it, I have made a detailed video that will guide you and help you position for massive gain. Tap on the video title at the top right to watch it, or check the description box for the link. And if you like this video, do well to drop a like and smash the subscribe button. And if you are still bullish on Bitcoin, drop a comment with your price prediction for the next all-time high and let's get into it.